Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today we are on 29th of May, the last 3 days of the month of May. And also we come across the start of the month of June. 1st and 2nd of June fall in this particular week. So whenever in a week the month gets over and the new month starts, the players are known to make the monthly trend reversal move in an aggressive way. Normally, you come across certain time, the month will get over in a week, and in the new week, the new month will start. In such a situation, in 2 weeks or 10 trading days, the players have got time to manipulate the market in order to handle the derivative structure. But in this week, you find there are only 5 trading days within which they should be able to just hit all the stops in the derivative market on either side. So obviously we'll come across very aggressive spikes on either side we could see. Mostly what they do is extended stop and moves. They do it during this particular time frame. So keep in mind the market is going to be very volatile during this week. So one has to be very cautious and try to enter and exit as a swing trade, so that when you are on the right track, don't just allow the position to maximize the profit. Unless and otherwise, use a trailing stop in a profit making position, so that you'll be able to capture the profit and re-enter into the market. And whenever they make a very quick downward stop and stop cutting the new low, enter into the market. And when they are making a quick upward stop and stop cutting the new high, exit out of the position. That way, you'll be able to really identify the great trading opportunity during this particular month. If you've got a very small equity and if you are afraid of the market, you are not able to understand how the players make the moves in the market, then it is better to keep away from the market. But if you try to follow the technicals or the fundamentals, you will be trapped. So keep in mind that the players are here to trap the traders, inducing them to follow either technicals or fundamentals, and later on when they commit the positions, the players act against the sentiment of the traders and trap them. So your smart trading has got 3 components, namely the forecast part of it. So I give here the derived forecast, which is used as a broader outline for the market. And also you can use it for session-wise trades. And this can be fine-tuned using the market reading. And I'll explain to you how the market reading has to be done after noting down the initial lows and the highs around 3:30 GMT in the live market code page. Then we use the trading strategy in order to limit the risk and maximize the profit. First of all, the forecast. So it is the end of May and beginning of June. The monthly trend reversal is expected to happen. The market is expected to make volatile moves and rise. So quick rise may be seen, followed by quick drop, and quick drop may be seen, followed by quick rise, and that sort of moves are going to be prevalent during this week. On 29th, today Monday, swing and slide moves are expected during that of the Japanese session. Then swing and firm up is expected during that of the European session in the case of Euro and GBP. And during the session again, they are expected to make the slide. Then tomorrow, swing and drop is expected during that of the Japanese session, followed by swing and firm up during European and the US session. Then again Wednesday, they are expected to make a dip and firm up, swing and drop during the European session, and then swing and firm up. During the drops, you try to buy because the players drop the market to buy against the sells what they have built up last week. So they will hold simply the market in the middle level and induce the traders to initiate buy position, thinking that they are all the supports, and later on they breach and go down. Then people look for retracement, etc., and try to take positions. Then the players just make a brief retracement and then quickly rise. So what is happening in the market at the moment is they gained quickly by the beginning of the month to that of the highest level, started holding at the highest level is the middle level consolidation. And then they have been booking profit with regard to the buy positions and correspondingly build sell positions holding high. Then from that of last week, they started slowly making the slide, inducing the traders who are not able to take any position to take the buy position during the slide, and then on Friday they induce them to liquidate the long positions. Then again they will hold it in the middle level, then induce the traders to take long position, make for the drop, so that the traders will think that okay, the support is breached, so the market could make a free fall, and then they will try to take sell positions, and the players trap them, just induce them to liquidate, induce them to liquidate the long position and turn sellers, and then later on try to trap them and gain the levels in the market. And next week onwards, we'll come across very aggressive gain in the market to reach the recent high and also hold high and build sell positions, and then drop again to buy back. Then after doing 2 times the churning of gain high, build sell positions, and drop and buy back against the sell, the traders might think that the market is making wide range swings, but later on they will try to gain the level one way to the highest level and start making high level consolidation with frequent upward stopping. Then people will become totally bullish, and any drop is a great buy opportunity. They will try to assume it that way. Then the players will give few profits to such traders, those who do the buy and sell after the rise, and those who take sell position, they make frequent stop, and then later on they just let loose the market to fall to that of the middle level consolidation, and then to that of the lower level consolidation. So that is how we come across the players make the moves in the market. So this shift in trading zone we need to understand. Only then you will be able to really trade well, understanding what the players are trying to do it. Then on Wednesday, they are expected to make the drop. Then afterwards, they are expected to, Wednesday being the last day of the month, they will just drop and hit all the derivative structures and later on firm up. Then from first onwards, they are expected to make swing and slide and then firm up and rise. Then again do the rise for non-farm payroll. They are expected to make a quick upward rise. And then next week, 5th of June, they are expected to make the week beginning false move on the first day of the week and then continue to rise the rest of the week. But with the split up and the session-wise forecast, I'll give it during that particular time. Instead of 5th, I will come on 6th and give you the forecast for the next week. So understand the players are here to trap the traders. So we should not get trapped. For that, what is the most important thing is a reliable forecast. So I have given it free, so you need not pay anything for it, and you can just watch it in the YouTube, which is recorded and displayed in YouTube and also in FX Street. And session wise, you try to follow and take position and do swing trades. Suppose if there is a swing and drop expected, then do the sell and buy trade. Swing and firm up is expected, do a buy and sell trade. Buy after the drop, then try to book profit during the firm up. Or if you want to do some big trade, try to buy during that of 31st or Wednesday European session drop, and later on book profit during that of the Friday 2nd June US session rise after that of the non-farm payroll. That way you can do the trades. Then you can fine tune the forecast using the market trading. In order to make sure that you are able to earn 100% profit in the trade, what you do is you have to go in for the market trading. Before going to the market reading, I am just going to explain to you the levels in which the currencies are expected to swing in this week. As I explained, that they are expected to make a further downward move in the market in the case of Euro to start with, and nominally in the case of GBP, and also in the case of USD, nominally they will make a drop, and USD CHF, they may make a brief downward move and start gaining the level. And in the case of Canadian dollar, they could make the swing and slide further. And in the case of Australian dollar, they are expected to slowly gain the level. After making the lower level consolidation, they are trying to push it to the middle level in the case of Australian dollar. So that will be gaining the level when Euro and GBP are making the slide. This is mainly to handle the commodity crosses. So understand the range in which they are going to swing the market, and near the lows what they set, and when they come and not breach the low, or when they breach the low and just stop cutting the new low, you can take the buy and then wait for the rise and try to see that they breach the highs what they are set today, and then you can book profit during such quick rise in this week. In the market trading, I noted down the initial lows and the highs around 3:30 GMT. With the help of the live market code page, you can just note down. I'll give the link for the live market code page. You can make use of it to look into that of the codes and note down around 3:30 GMT the initial lows and the highs. And later on, you just compare it throughout the day from time to time, whether they are closer to low or closer to high, how they have breached the high, how they have breached the low, and how they are staying above the initial high, how they are staying below the initial low. Then we will be able to understand what move is going to be the next move. As I explained, that they will always make the session start a stop point, followed by extended or intentional move. Then if they do with that of the extended move for 2 hours on the downside, the intentional move will be for 2 sessions and start of the 3rd session on the upside. In between the session, they may make the false move, and also before that of the data release, they may make the false move. And during that of the mid session, they may not make any big way move on the up or the downside. They may make the move within the range, and that is referred as swing. So follow the type of moves they are doing it, so that you will be able to understand whether they are going to make a rise or the drop, and that will be 100% confirmed forecast for you, and you can follow the forecast what I have given it, and also confirm, double check that with the help of the market reading, then commit positions. You will be able to see a good profit in such trades. So let us see whether they have breached the low or the high to understand which way they are going to make the move. In the case of Euro, they are not breached the low or the high, what they are set around 3:30 GMT. In the case of GBP, they are not breached the low, but the high has been breached and went up to that of 1.2831 from that of 26 and come to 1.2828. So that means what? They are going to hold above that of the initial high, and also it is showing positive net change. So they could make a nominal gain in the case of GBP while making the slide in the case of Euro. As a result, they will make the drop to start with in the case of Euro GBP cross. They are making contrarian moves. Similarly, Euro in the negative net change, GBP is in the negative net change, which is again a contrarian move. Then in the case of yen, 111.17 is the low, 111.47 is the high. They are not breached the low or the high. Then CHF 97.43 is the low, 97.60 is the high. They are not breached the low or the high. Then Canadian dollar 1.3433 is the low, 1.3498 is the high. They are not breached the low or the high. Then in the case of Australian dollar, 74.36 is the low. They breached it by 3 pips and come above quickly after a brief downward stop, and that means they wanted to gain the level slowly. In the case of Australian dollar, 74.50 is the high that is not breached, but watch whether they are holding above that of the initial low for more than 30 minutes, then try to take a buy position. You'll be able to see a definite profit in your buy side. So Euro and GBP, Euro to start with, they are expected to make more slide when compared to that of GBP. Last week you have seen that Euro, they have been holding and making the slide in the case of GBP, and they are just doing opposite to that today. And later on you will find that they will make further drop in both Euro and GBP on Wednesday and reverse the market. So the recommended trade, so when they make a downward stop and of about 30-40 pips, you can try to take a buy in the case of Euro. Similarly, a brief upward stop and you can take a sell and keep the hedge order to limit the risk in the case of Euro. And in the case of GBP also, a brief upward stop and you can take a sell, and then later on when they drop, you can try to take a buy. So that way you can do the trades today. Either way, trading opportunities are there because they are expected to make either way quick moves during this particular time. So understand the quick moves, wait for the market to make quick moves. When they are doing consolidation, don't commit positions. When they are making quick upward or a downward move, when the volume builds up, then immediately identify such currency and take the position. You will be able to see definite quick profit in such trades. So these are all the market timings. So those who want to make a note of it can just look into that of it and also make a note of the time frame. So the market is divided into 3 sessions. The Japanese, European, and the US session. It is a 24 hours market. That is why we follow it using the GMT time frame. And each session is subdivided into early, mid, and the late sessions. And early and the late session, they handle the majors. Mid session, they handle the crosses. That is how they systematically make moves in the majors as well as crosses. Because of the moves, variable moves or contrarian moves, they do it in the case of majors. The crosses are bringing in volatile moves. If you got any doubt, question, you can ask me in the question answer window. If Street Forex live video window, I'll be able to see the question and I'll answer to those questions. I'll display the forecast sheet. If you get any question in mind, kindly ask me. So market is going to be volatile during this particular last penultimate week of last week of the month of May. Suddenly they will bring in more volatile moves in the market. So understand and then try to trade accordingly. You'll be able to really get the benefit out of that. There is any question, kindly ask me. I'll be willing to answer to those questions. Otherwise, I'll conclude the webinar. I'll show the range in which the currencies are expected to swing. Okay, no question is coming forward. So let me conclude the webinar. Let me take this opportunity to thank FX Trade for the facilities provided to present the webinar, and for you people for your kind listening and understanding of the market moves. And if you have got any doubt, you can always contact me through my email ID or chat ID, and I'm willing to answer to your questions and try to see that you are able to get rid of the market fear so that you will be able to recognize such volatile moves as great trading opportunities. Then try to build up your capital. Wish you all the best in your trades in this week. See you on Friday.